Hey everybody, this is Jim at SP500chart.com. It is 5:15 on Sunday afternoon, January 6, 2013. We're going to use some time-honored techniques to understand modern markets. And this is one of our featured daily technical analysis videos of the S&P 500 index. In fact, it is our weekly review. And I think it was kind of an interesting week, and we'll talk about that. But before we get into it, I need to remind you that the website and the video are for educational purposes only, and that nothing stated in the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research, and you should be making investment decisions that are suitable for your personal financial situation. Personally, where the markets are right now, I wouldn't put any money in there that you're not willing to lose. So I guess that should always be the strategy, but you need to know what your risk tolerance is. It's not just a matter of researching your stocks, it's researching your personal ability to assume risk and to absorb loss. So anyway, even though that sounds real smart, I got to tell you once again that I am not a licensed financial professional. I am just a guy who draws lines on charts. Okay, we are looking at a 10-minute chart. Now, what area of time are we looking at for last week? Well, I'm just going to draw a quick rectangle. It was a shortened week. So this is our last week of trading. Now, what worked well and what didn't work at all? Well, the first thing that worked well was the fact that we had been watching this descending channel for roughly 6 days or so, with the idea that when that channel breaks to the upside, that should mean the end of this downward leg. What didn't work was seeing the degree of that gap up on the second. I don't know that anyone, well, I don't want to say that. You might have thought it was coming, but I don't know that you could look at the chart and say, yeah, we're about due for a 20-something point plus gap up. I frankly was hoping we would get a little back test of this channel line, either one of these lines right here. I was hoping we would get a back test before we took off, but we did not. I was still long, but just not as long as I would have liked to have been. So right now, I think we can count that as a victory for the chart, that we broke out of that downward channel and boom, there we go. Now, one of the reasons why I didn't think we'd get up that high was we had two what should have been fairly strong level areas of resistance at the 1440 and 1444 levels, and those were due to a neckline on what we've been looking at as an inverted head and shoulders pattern. Okay, and I guess as I look at this now, at least as it relates to this smaller pattern here, forget the big one for a second. As it relates to this smaller one, this leg down now makes perfect sense. What doesn't make sense is the fact that it looks like we made a false breakout there in the middle of December. If you look over here on the left side of this, the left shoulder of this smaller inverted head and shoulders, and I'm talking about the one that runs from the 22nd until the first of the year, we had a double dip left shoulder, kind of an interesting head here. But if you say that this is the correct neckline, then we had a dip here and then a double dip. It's just we got over this neckline very briefly. So here we have big dip as far as the size and duration, little dip, head, little dip, big dip. So that kind of makes sense. Now what I'm wondering now is, where is the correct neckline if we are to see this whole larger pattern develop into a larger head and shoulders. The question now becomes, is this the end of the head here around that third week of December? Or is all of this the head and we have yet to form the right shoulder? I cannot answer that. I wish I could. I can tell you that if this is the correct neckline, then we really did not have much of a right shoulder at all. This right shoulder would have formed over roughly 40% of the time frame that was the development of the left shoulder. That doesn't look quite right to my eyes. So I'm kind of on the lookout here for the potential of a longer duration right shoulder to form over the coming weeks. Let's see if my guess or hunch is at all anything worth listening to. It may or it may not be. Right now, so I would say that we were good to go on the call for once we get over one of these orange lines, we should start up. But the degree to which we gapped up on the second was really, frankly, maybe you saw it coming, I didn't. But now that we are there, it looks like we have started trading in between two trend lines that look like one of what some people call a typhoon flag. What is a typhoon flag? Well, it's like you got the flagpole and the wind is blowing so hard, the flag is going straight out and even slightly up. So typically we watch this bottom line, and when that bottom line breaks, then that generally shows us that the typhoon flag serves as a reversal as opposed to a continuation. If you want more to listen on that, check out, I think it was either Thursday, the video after the close on Thursday. We talk about what I think the psychology is in these flag patterns as they develop. So coming into the week, guys, it looks to me like we're very close. I'll move this line over here now, this oval. It looks like we are very close to a cluster of resistance up in here. I would be surprised to see that get taken out. Now, in the long run, I would not be at all surprised to get over those lines. But it just looks to me like, and I've been saying junk like this for weeks and months, it just looks to me like now that we're up to this level, that was the same level as the top of our triple top back here in the fall. Everything seems to be saying that we should be in for finding a top somewhere quite near where we are right now, and very likely to be in and around this cluster of resistance. And if we do that, again, I'm looking for some more consolidation over here, something that hopefully is more symmetrical to what took place on the left side of this pattern. Because if we get that, then we can start to see a pattern that I don't want to say we, I'll say me. I would start to see a pattern that I could put more faith and trust in. Instead of saying, gee, here we've got more than a month on the left shoulder here, and over here we got a week plus, or less than 2 weeks. So I guess that's where I'm coming from right now. So coming into this week that starts on the 7th, I would watch this bottom line. If this breaks, I don't think we're going to fall down real far, but I think we would be in for a 20-point swoon, bringing us down once again to the 1440s. And again, it would be lovely to see a bounce in and around between the 1470-ish level and the 1440s. Be nice to see us bounce around there for a number of weeks, then come back and take out 1470. Because if this pattern does that, then we would be looking at this black line as our neckline of this pattern, and that would give us a really nice target of roughly 125 points higher than when this would break out, and that could be taking us up to the 1580s, 1590. Okay, and again, if you look in the big long picture of things, that would essentially be taking us back to this top red line where the S&P was in 2000 and where it was again in 2007. If we get up there, then we got some soul searching to do, because either the market turns back, and likely turns back sharply there, and I tend to think that that would be the case based upon how this just kind of looks over the past 15 years or so. But is it out of the question that that line could break? Well, if it breaks, it would need to break by a lot, and then I wouldn't, I guess what I'm saying is I believe eventually, yes, this market will plow higher, but it looks to me that that we may be forming another one of those um, uh, potentially an inverse head and shoulders on the monthly chart that would be very sweet. But so I would just watch for resistance if we get there, when we get there, if we get there, 2013, 2014, whenever it might be, I would be prepared to watch that sucker like a hawk. So guys, that's the video, the weekly review for the week ending January 4th, 2013. It was a short trading week, but certainly one that was very interesting. Let's watch this line coming into this week. When this line breaks, that will likely be setting up the reversal to take us back to what I think should be a trip to the 1440s. But we'll watch it and see. And if things look different when we start to get there, which they often do, hopefully we'll be savvy enough to discover that. Hey guys, thanks again for watching the video. And if you haven't heard from me since, I think you probably have, but I want to once again, Happy New Year, and let's see what 2013 brings us.